Hello, my name is Casper. As you know, this is my channel. Welcome, Uselink INV, and I will be making a video today on gold, different ratios, and why I think gold could be a big winner for the next decade. Some of the charts I have posted, as you know, for sometimes some ratios, but I wanted to do a bit more of a documentary on them, and yeah, that's what we're going to be looking into. Different ratios for gold. Where are we? And yeah, these are some of the ratios that I look at week to week, um, maybe some month to month, but week to week for sure, once a week. As always, follow me, subscribe, all that good stuff, so we can grow this lovely community. And what a day with the Fed decision. I just got on, so I haven't seen the details at all. But yeah, definitely I can see gold and silver up big time, and the dollar is down. So definitely something has come up, and maybe they're looking forward to cutting rates in 2024. That is what I think will be in the, what's it called? The dot plot. I think it's the dot plot. Yeah, the rate cuts in 2024. Otherwise, you wouldn't have had this big of a reaction. But I don't know. Let's see when I get when I have the time to look into it. Let's see where we are. Let's go to the charts. I will share the screen very quickly. Boom, there it is, the screen. Alrighty, going to, as you can see, different ratios. I have roughly, what is it, 11, give or take. And yeah, we will be zooming out here. We will be zooming way out. This is gold against the SPX, so the SP 500, which is, I wouldn't call it the benchmark, but that is the big markets that people are usually investing into, the SP 500. And what we're looking at here is 20 years of data. And this is the low for gold back excuse me, back in 2000s. You can see we had that squeeze there, and then ever since it was more or less up until 2011. There we are. We have the highs here, we have a pivot there, and we can now start to connect our falling wedge, which, you know, I love to do the falling wedges. I love these, especially bigger time frames. That is really where they come into play. The 5 minute, 1 hourly, to me, it doesn't really matter. I only use that to keep myself on par with my technicals, but the long-term stuff, that's really what I like to look at. So we have here a goal against the SPX. So you can see the peak here in 2011, and ever since we have come down, 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 down. And so for the past 10 years, you should have been in the indexes, you know, the SP 500, the NASDAQ, and so on, big time. However, with this coming up here, very well defined, when we break, I think we will break at some point in time. The only question is how and when. Yeah. So when we break, that's really when you want to be in gold, no doubt about it. However, if we look in here shorter term, I can go to the weekly. Maybe we can look at some of the stuff here again. This is actually the first real touch of that long-term trend line. We have the second here. If I move it up quite a bit so it aligns better. And then, you know, I love to see 3 touches on a lower trend line. So it could be, also given what we've seen today from the Fed, everything is just blasting higher. Also gold and silver, but also the markets, that we could be in for that third touch, even with an undercut, and then we blast higher. That's also a scenario. But long term, I really think that within maximum 2 years time, in my view, maximum, absolute maximum, you want to be in gold compared to the markets. You know, the apex is roughly, you know, into 2025. So that is where you want to be when this breaks to the upside, because I really do believe that it will break to the upside. But yeah, let's see when we break again. I don't know the exact timing of it, but at some point in time we will have some sort of break there. That's my opinion on that one here. Alrighty, against gold against the Nasdaq, so the big tech that has done quite well actually against gold ever since the peak in 2011. Same thing again, huge outperformance by the Nasdaq. We actually have our 3 touches now, and we have broken out, which is ideal. However, zooming in, you can see here some shorter term stuff here. This is roughly 5 years. That's the low breaking out here, and now we're coming in for some sort of retesting here. We still have a defined trend line there, so we do have our bull flag. above the 10-year long golden trend line there. So that's beautiful. What you often see, well, not often, but you can see a double bottom with this. If you don't rip right away, you can actually see this kind of rounding double bottom, and then that's where you go. So keep that in mind. But still, we have broken out, and yes, we're grinding right now. So at some point in time, we should resolve to the upside against the tech sector. We kind of did the same thing here. If not the exact same, but we had that big move up, and then we had a bull flag, and then boom, that was gold outperforming. If we go to where we are now, we are, if I can find it, Jesus Christ, we have that move up here, and then we have that bull flag. Quite similar, yet a bit different, but still, we will see where it goes. But it is to my beliefs that we are going to go way higher here for this move. And you can do some measured move with the fib extensions. Let's do one here. If this is how we're going to do, then a 100% measured move would take us all the way back to here at roughly, let's call it 1.8, and we are currently at 0.12. So if we get there again, that's way in the future, but you have quite a decent amount of outperformance by gold against the NASDAQ. In the waiting, that's my humble opinion. Gold against the CPI, so against inflation. You want to look at it here. This is actually a very, very beautiful 50-year long cup and handle. Again, I've shown this a decent amount of time on the channel. Also, I think we've made a video or two on this. Look at it here, beautiful. The next one here, some sort of bullish consolidation there. So when we break, and we will break that trend line, without a doubt, that is my highest conviction, because inflation will always outperform the dollar or erode the dollar, and that is gold is the inverse of that. So we will break here at roughly, let's call it 8, just to take the highs, but it is a bit lower, 7.5. And yeah, that's really, really when gold will start to do its thing, outperforming inflation. That's when things kicks off. So we're still, how far away are we? Let's see here, roughly 15%, give or take. So still very beautiful, and some short-term stuff. Again, we had the 2020 high there, August, and ever since we have some sort of formation here. Again, we have a smaller neckline there at roughly 7. And yeah, that's the one to go for the short term. So still long term, beautiful technicals here. Again, we will break it to the upside. I would be insanely surprised if not. That means that the dollar is going up a lot compared to inflation, and that will drag gold down. The dollar can go up, but if it doesn't outperform inflation, gold will still do very well. Gold against overall jet to the this is the US debt. How much they have. I think it's like 33 trillion. Big number, big number, big number. And so here we measure gold against the overall debt. So you can see gold has heavily been underperforming the debt. However, we have a very well-defined trend line there. Beautiful. Peak to peak touches more or less all the way down. We have 2 there actually. And you have this lower one there. So to me, again, this is a wedge forming, and gold is doing whatever it can to break out against inflation. Excuse me, against the overall debt. So if we can have that in our back as well, that gold is outperforming debt, maybe soon inflation. It's a bit further away, I know, but still, that is a bullish squeeze, a bullish triangle. And you can see how close we are. This month, we had a bit of a peak above here. But again, I would be surprised if we not within a year will be breaking that to the upside. I mean, my personal opinion, sooner than a year, but again, the wedge goes a bit further than a year. So that was not the one I wanted actually to do the back. Excuse me. I'm ill prepared. No, I'm not. Just there it is. Excuse me. This is Bank of America against gold. Also a very important ratio to look at. So we have the banking sector and gold, and they are nemesis, right? I mean, at least gold is nemesis to the banks. So here you have it. From the 80s all the way well into the 2000s, so 25-year long yellow uptrend there. You have it, beautiful, well-defined. And then we started to top out here sideways and boom, breakdown in 2005. That's really when gold outperformed the banking sector. And the banking sector hates that. They really, really don't want gold to outperform the financial. But here it broke down, and the rest is history. Huge, huge move down, all the way down to the lows there, give or take. And ever since 2009, this is the low in gold, by the way. We have made this it's not as steep. It's more sideways, so it's more of a bear flag, a big bear flag actually, with a well-defined center point right here. You can see it actually quite well defined. My take is that we will be when we break this center line here, that's again when gold will start to outperform. We will get down to the lower side, and then we will probably have a bounce. Short-term stuff, we have some bullish stuff here in the favor of the bank actually. 1, 2, 3, 4, 5 in a falling wedge, so we could expect some sort of bounce here, but my guess is that we will roll over and gold will start to outperform the banking sector, the big one, Bank of America. Also a huge milestone. Again, these charts have many of them haven't broken out yet. We'll come to some that has, but many of them has not broken out yet. So we are still early, even though gold breached the all-time high, you know, Monday, 2 weeks ago. So yeah, so still very early, showing that gold is still, in my view, heavily undervalued compared to other metrics than the US dollar. So gold against M2 money supply. Here we have one where gold has broke out. Again, the highs in 2011. Well-defined squeeze right there. You have it. It's quite nice to see. And we are breaking out there. So gold is not outperforming M2 money supply. M2 money supply is coming down big time as we speak, and gold is doing all right. But the drop in M2 means that this ratio gold is outperforming. So when they start to print again, and they will, or cutting rates and so on, then M2 will start to increase, but that's when gold will start to increase even further. That's my opinion. Again, here we have broken out. It's a nice metric. Gold against the DXY. Why not use the dollar? I like to look at the DXY as well, because it's it's not a currency pair, but it is dollar strength against many other currencies, mostly the euro, yes, but you also have the yen and so on in this DXY, in the dollar index. So what am I looking at? Here we have the highs 2011. You could also take a trend line there to there. You can almost align it with the high there that we had 2 weeks ago. But what I'm looking at is actually that we are now in some sort of cup and handle play here, in my view. Shorter term, we have a neckline here coming down, and you have that bad boy right there. You can see it there if I draw it correctly. So if we break above roughly 20 in this ratio, that's also when gold will break to the all-time high. So that makes total sense. But against the DXY, the gold hasn't made a new all-time highs yet, just to keep that in mind. Here we have gold against Bitcoin, the good old bitty coin. It's no surprise that Bitcoin has been the best performer for the past 10 years. Hands down, very good. My best trade was also in Bitcoin from 2020 to 2021. So I don't bash on Bitcoin. But it's still some early stuff here. We haven't made any major higher highs yet. But what you're seeing here is gold against the Bitcoin. You can draw a line there all the way down, connection, and then you don't have any further. Then we have one more right now with a lot more interactions coming down in there. And what happened here, like in what's this? In 2022, we had the breakout where gold was in favor, and now we're just grinding it. Well-defined, actually, channel there. If we go to the daily, you can see how well-defined it actually is. Right there. So you can see the channel right above that big trend line, which we broke here. And again, hopefully, if this resolves to the upside, that means that gold will outperform Bitcoin. Again, for now, it's coming down. Yes, Bitcoin is outperforming. But usually these downsloping channels here, they have a higher tendency some point in time to break to the upside. And with regarding to that we haven't made a higher high yet, you can see here clearly, that's a high, that's a high, high. So we haven't made any higher highs, and we have only made lower lows. That is the perfect definition of a downtrend. But maybe this channel is some early stuff for gold. Again, we have to wait and see, obviously. We're still in a downtrend, But this is the best attempt, in my view, in a very, very long time for a more bullish setup against the Bitcoin. Here was just a retrace, then rolling over. Here we have a bit more of a bear flag rolling over. Same thing here again, bear flag rolling over. And now it's the first time where we've made double bottom all the way up in some sort of bull flag. It's a lot different than what we have seen before. So it's one to watch really for the good old gold. The most important ratio, gold to silver ratio, I look at that more or less daily, especially now, because we have the highs of 2011. I've also made a video on gold, on this ratio, how low can we go during this bull market for gold. Check it out. It's quite old, but still, I think it's very valid to this point, this day and age anyways. Excuse me. We have the lows in the ratio in 2021. This was the lows in the metals. This was the low in the ratio. And now look at this insanely tight squeeze right there. And the fun begins when we break the blue wedge and then obviously the green one. Then we have open skies to the downside in this ratio, meaning gold and silver will go up. And this peak right here in 2008, right there, in my view, is the exact same as to what we have here. So it is my firm belief that we are right here, the exact same spot as we are here. And when we break down from this, you want to be in gold and silver, especially the miners. And I think we are very, very close. But as you know, you can see how many times it has been teasing us with that breakdown here. If we add the line to there, you can see how many times it has had a false start. Now we're all the way to the top again, Fed decision. Let's see, but again, big move down, sideways action. That's always a higher probability of going down with the trend, and the trend started down. So that is my take. We want to get below roughly 78, 77. You want to get below this cluster here, really. Then we have confirmation, and then ultimately the green support. But still, I think gold and silver, as you know, will do unremarkably well for the next years to come. And then obviously we have gold against the dollar. The reason why I say gold will outperform the dollar is it has already done that against almost any other currency that you have out there. And the dollar is always more or less the last one to let go. This was the big scare, as we talked about, 2 weeks ago. And again, we have the highs here. On a Renko chart, we haven't made any higher highs. We want to have a daily close above 2075. That's when we have a breakout on the Renko. And we are currently at 2020. So roughly 60, that's incorrect. $55 away from that daily close. But still, long term, again, gold looks absolutely stunningly fantastic. Same thing, huge, whoa, go away. We have that huge move up here again from the 2001 to 11, 10 years. Then we have a lot of sideways action, cup, handle, or bull flag right there, depending on how you want to make it. I mean, the pressure is to the upside for gold. But again, when you're trying to break out of a big level, like, getting above the 2K, there's a lot of shenanigans going on, a lot of volatility. That's exactly what we see right here, right now, for gold, really. So yeah, these are some different ratios that I have for gold. We measured against the indexes. We measured against money supply, the Dixie, Bitcoin, debt, inflation. And I think gold, again, even though gold has done quite well, we are still not at the gates. We are only just beginning here within a very short period of time, in my honest opinion, for gold. And yeah, having some exposure to gold really can't hurt in this day and age, because the world has gone mad, and I think gold will be way higher when we go into 2030. That's for sure. My targets, I've done that in a different video. They are way higher than we are today. So with that being said, I hope you enjoyed it. I hope the audio was okay. Give me some comments below. Do you agree? Do you disagree? Or what do you think gold will do? Again, do you have a bear case? I would love to hear it, especially if you can have a chart. That's always the most telling way. A chart speaks a lot more than words. So with that being said, I just put my cat down on the floor. Have a great day, and I will do the Iranian recaps, midweek updates, and the gold and silver, the commodities update right after this one here. Again, like, subscribe. You know what to do, guys. Have a great one. Bye.